If you've just been named as an executor for a Cape Coral or Fort Myers estate, you should know that our legal system actually calls this role a personal representative. But before you touch a single bank account or piece of property, you need to watch this. Most people completely misunderstand their first duty, and making the wrong move right now could not only drain the estate in unnecessary legal fees, but it could actually make you personally liable for the estate's debts. Today, I'm going to show you exactly what a personal representative actually does so you can avoid a massive financial regret. Before we get into this, if you've just been named personal representative, trying to figure out your exact legal duties can feel incredibly overwhelming. Families just like yours reach out to me all the time, asking where to even begin. That's why I put together a free first steps checklist that walks you through these exact milestones from start to finish. You can find the link to download it right in the description below. No strings attached. Use it to follow along as we jump into duty number 1. Here's where almost every newly appointed personal representative makes their first mistake. Being named in the will does not give you legal authority to act, not yet. Even if your name is right there in the document, you cannot access accounts, move assets, sign anything on behalf of the estate, or take any formal action until the court formally appoints you. In Lee County, Florida, that means working with your probate attorney to file a petition for administration with the 20th Judicial Circuit Court down in Fort Myers. Once the court approves it, they issue a document called Letters of Administration. That is your legal authority. Every bank, title company, brokerage, and government agency will ask to see it before they will deal with you on behalf of the estate. So get a certified copy. You will need at least 6 to 10. Everything else in this video depends on having that authority in hand first. One more thing on this. The personal representative role comes with what Florida law calls a fiduciary duty. That means every decision you make must be in the best interest of the estate and all beneficiaries, not your own personal interest. Even if you are also a beneficiary yourself, that standard applies from the day you are appointed until the estate is closed. Duty number 2. 2 things need to happen right away that most people don't anticipate. First, apply for a federal tax ID number for the estate, called an EIN. The estate is its own legal entity for tax purposes, and you need this number to open a bank account in the estate's name and to file tax returns later. You apply free at IRS, and it takes about 15 minutes. Second, open a dedicated estate bank account immediately. All estate income and all estate expenses run through that account only. Mortgage payments, HOA dues, utility bills, maintenance, legal fees, all of it comes from the estate account. Mixing estate money with your personal funds, even by accident, is called commingling, and it's one of the fastest ways to create personal liability as a personal representative. Keep the money completely separate from day 1. Duty number 3. As personal representative, you are responsible for preserving the value of everything the estate owns from the day you are appointed until it's distributed or sold. For real property, secure the home immediately, change the locks, put no trespassing signs up, verify homeowner's insurance is active, and stay current on the mortgage and HOA. This is crucial. Standard homeowners policies often suspend or reduce coverage once a home has been vacant for 30 to 60 days. Call the insurer right away, notify them of the death, and ask specifically about their vacancy provisions. In Southwest Florida, a vacant home without AC running in cities like Cape Coral or Fort Myers can develop mold within weeks. That becomes an estate liability. For financial accounts, present your letters of administration to each institution and have them retitle the estate or moved into the estate account. For personal property, vehicles, jewelry, artwork, furniture, collectibles, document everything before anything is moved, donated, or distributed. Photograph it, list it. Nothing leaves the estate without going through the proper process. On funeral expenses, if the family has already paid for funeral arrangements, those costs are valid estate obligation and are reimbursable from estate funds. Keep every receipt from day one. Duty number 4. There are 2 separate legal notices required in Florida formal administration, and most families only know about one of them. The first is the notice of administration. This goes to beneficiaries, heirs, and certain other interested parties. The notice of administration is an official document telling beneficiaries that probate has started. Once they receive it, they have exactly 3 months to raise any legal objections about the will or the court. Your attorney handles the drafting and the service process here. The second is the notice to creditors. The responsibilities here are split between you and your attorney. Your attorney handles the publication side, arranging for the notice to run in a local Lee County newspaper and the filing proof of publication with the court. But there is a separate duty that only you can fulfill: identifying every known creditor and making sure each one receives direct written notice. Florida law requires that you promptly make a diligent search to identify known or reasonably ascertainable creditors and serve them with direct written notice. That means going through mail, bank statements, medical bills, tax returns, and any outstanding accounts to build a complete picture of who the decedent owed money to. Keep a written record of your search. You may need it to demonstrate you did this diligently. Once the notice to creditors is published, a formal claim period opens. Creditors generally have 3 months from the time of the first publication of the notice to creditors, or 30 days from the date they received the direct notice, to file a claim, whichever gives them more time. That window cannot be shortened or waived. If real estate is involved and the family wants to move on the property, this timeline needs to be factored into the plan from the beginning. Duty number 5. Within 60 days of receiving your letters of administration, you are required to file a verified estate inventory with the court. The inventory covers probate assets only. Those are assets titled solely in the decedent's name with no automatic transfer in place. Things like a real property in their names only, bank accounts without a named beneficiary, vehicles, investment accounts without a beneficiary, investment accounts without a beneficiary designation, personal property, and business interests. For non-probate assets such as jointly titled property, accounts with named beneficiaries like RAs or life insurance, assets held in a living trust transfer outside of the probate estate entirely. They don't go into the court inventory. You still need to identify them early because they affect the overall financial picture, particularly for tax purposes, but they are handled on a separate track. For each probate asset, you need an estimated fair market value as of the date of death. For real property, a certified appraisal from a licensed appraiser is what the court and the IRS require. A comparative market analysis from a real estate agent can be a helpful working estimate early on. useful for the family's planning, but it doesn't substitute for the certified appraisal when it comes to the court inventory and the tax filings. Date of death appraisals look back to the value at the time of death, so make sure to use an appraiser with estate appraisal experience. Your attorney prepares and files the inventory. Your job is locate the assets and pull together the documentation they need. Duty number 6. If there is a real property in the estate, and in Lee County, Florida, there usually is, that property needs active attention throughout the entire probate process. From the day you are appointed, you are responsible for keeping it maintained, insured, and financially current. Every month it sits in the estate, months of carrying costs, utilities, lawn care, insurance, HOA dues, property taxes, and potentially pool maintenance. Those are all estate expenses paid from the estate account and documented for the final accounting. On the question of selling, in Florida formal administration, if the decedent's will grants the specific power to sell, the personal representative can often list and sell real property without a separate court order. However, if there is no will or the will doesn't include this power, you must get court authorization before the property can be sold, but conditions apply. The will may include specific instructions. Beneficiaries may have rights that need to be respected, and the process has to be handled correctly to avoid title problems later. I actually made a full video covering exactly this. It's called Can You Sell a House Before Probate Ends in Florida? And I'll link it in the description. Work with your probate attorney before listing anything. One thing that consistently surprises families: sale proceeds don't go directly to heirs. They come into the estate first, get properly accounted for, and are distributed through the right process after all debts and obligations are resolved. My name is Michelle Miller. I am a licensed real estate agent here in Lee County, Florida, and I hold a certified probate expert designation. My primary focus is acting as a guide for families making decisions about inherited homes. Whether you are in the middle of formal probate or you are handling an estate outside of it, figuring out what's happening with the property is usually the most overwhelming part. If you are trying to figure out if you should sell, hold on to, or rent an inherited house here in Lee County, you don't have to navigate it alone. People in your exact shoes reach out to me all the time. Feel free to use the contact info in the description below to reach out, and we can look at your specific options. As a reminder, I'm a real estate agent and a probate specialist, not an attorney. I can help you understand the real estate landscape, but for specific legal advice, always consult your Florida probate attorney. Okay, let's talk about duty number 7. While the creditor period runs, your ongoing job is to keep the estate managed and fully documented. Every estate expense gets paid from the estate account and recorded. Every decision gets documented. This matters because at the end of the process, you file a final accounting with the court, a complete record of every dollar that moved through the estate. Clean records from day one make that process straightforward. Reconstructing it at the end is painful. Keeping all of this organized, every expense, every transaction, every communication, is one of the most underestimated parts of the role. If you are looking for a tool to help you manage it, I'd genuinely recommend checking out Estate Exec. It's one of the leading online platforms for estate administration. It helps you track assets, debts, expenses, and tasks all in one place, and it works in every state. I've linked it in the description. It's an affiliate link, which means I may receive a small commission if you sign up. but I'm mentioning it because I think it'll genuinely make this process easier, not because of that. Worth a look. Florida law also requires the personal representative to keep beneficiaries reasonably informed throughout the process. That doesn't mean daily updates. It means proactive communication when things happen, when timelines shift, or when decisions need to be made. Most family disputes during probate aren't actually about money. They're about people feeling left out or kept in the dark. Regular communication prevents most of that. On building your team, you have the authority to engage professionals, your probate attorney, a CPA, an appraiser, a property manager, a real estate agent, and to rely on their guidance. You don't have to manage every detail personally, but delegating to professionals doesn't transfer your fiduciary responsibility. You remain accountable for the estate throughout. Duty number 8. Once the creditor period closes, you review the claims that were filed and work with your attorney to determine which ones are valid under Florida law. Valid debts are paid in a specific priority order. Administration costs first, then reasonable funeral expenses up to $6,000, then federal debts, followed by necessary medical expenses from the last 60 days of the decedent's last illness, then other claims in sequence. If the estate can't cover everything in a given category, creditors in that class are paid proportionally. One clarification that matters: you are not personally responsible for paying the estate's debts from your own money. You are managing estate funds, not contributing your own. What does create personal liability is distributing assets to beneficiaries before debts are fully resolved. That's the sequence that gets personal representatives in trouble. Debts and obligations first, distributions second, always. Also worth flagging, as a fiduciary, any transaction where you personally benefit, buying estate property yourself or arranging a sale at below market value to a friend or family member, is what Florida law calls a conflict of interest. Those transactions are voidable unless all beneficiaries consent after full disclosure or the court approves it. When in doubt, disclose it to your attorney before you act. Duty number 9. Tax compliance is a personal representative responsibility that surprises most people. Up to 3 returns may be required: the decedent's final personal income tax return for the year they died, an estate income tax return for any income the estate earns during administration, and potentially a federal estate tax return if the taxable estate value exceeds the federal threshold. Your probate attorney and a CPA with estate experience handle these, but you need to know they exist and flag them early so nothing gets missed. One thing most people don't realize: Florida law allows the personal representative to receive compensation for their work. Usually, a percentage of the estate's value is presumed to be a reasonable fee. However, the exact amount really just depends on how complex the estate is and whether you end up having to do any heavy lifting, like managing extra legal issues. Whether you choose to take it is a personal decision. Many family members waive it, but it's worth discussing with your probate attorney early because it has tax implications either way. Once debts are paid and the tax obligations addressed, you move into the closing phase. Your attorney prepares a final accounting, a complete record of everything that passes through the estate, along with a plan of distribution showing what each beneficiary receives. That gets filed with the court alongside a petition for discharge. Beneficiaries have 30 days to object. If there are no objections, The court approves the distribution, assets transferred to beneficiaries, and the court enters an order of discharge. At that point, your role as personal representative is legally complete. One of the duties we covered today, managing and protecting estate property, has a lot more to it than most families realize, especially here in Florida. A vacant home in Lee County, whether it's in Cape Coral, Fort Myers, or the surrounding areas, needs attention from day one. Insurance gaps, carrying costs, hurricane season, HOA requirements, and managing all of it remotely from out of state. There are real risks if you don't know what to watch for. That's what I'm covering in my next video. See you there.